And the recording is on. And let's start on the 4-hour chart actually, and take a look at the price action, the correct price action. Okay, John, please, can you just handle the new members?
Yes, I let them in. Yes.
Thank you. Okay, so let's start on the 4-hour chart. As you can see, in this region, the sweep happened. We talked about this several times in the past live sessions, past markup sections, and everything. So price fed the liquidity after reacting on this supply zone here, and after the liquidity sweep from this region and this region, price just reversed to the downside and started a bearish order flow until this point, until reacting on this flip zone down here. Because as you can see, this flip zone down here was a pretty valuable 4-hour flip zone that caused inefficient push to the upside, swept the liquidity, blah, 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 blah. We already talked about this several times. So let's just focus on the current price action, which is in this region. So what can we identify here? Can you just mark the lows and highs out, please? I'm asking you to draw on my screen and mark the lows and highs out. Okay, Nabab? Okay, how can I remove the drawings? Okay, found it, perfect. So, yeah, basically, as you can see, this point right here was our high point. This was the last strong high point. If you look at the daily structure, for example, this was the last strong high point, because as you can see from this movement, price swept all of the liquidity, and from this movement, price created not a break of structure to the downside. It wasn't a break of structure, it was just a big break. As you can see, it started from this candle. It created liquidity, price created a pullback right here, and from this movement, from this supply zone, price just broke below this structural low point, swept all liquidity from this region and created inefficient movement. So basically, this is our strong high point that is still unbroken. This strong high point is still unbroken, as you can see. Price tried to break above this high point several times. As you can see, here's the first try, second try, couldn't break above. Here's a rejection on that supply zone and high point. Tried to break above one more time, couldn't break above, one more rejection, tried to break above one more time, couldn't break above, rejection. So basically, we are seeing that price is trying to break above this high point, but the reality is price just mitigated this supply zone. Price mitigated this supply zone, collected all of the orders from this supply zone because it mitigated the more than the 50% of this candle. As you can see, it's more than a 50% mitigation. So basically all of the orders from this candle has been collected. There might be a few more orders on the top of this candle in the form of a 1-minute supply zone. Sorry, just a minute, I will just open the chat to see if you're asking anything. Okay, so there could be more orders on the top of this supply zone in the form of a 1-minute supply zone or 5-minute supply zone, for example, but price collected most of the orders with these movements, right? And from these movements, price tried to break about the last week low point. And can you mark the last week low point? Just one person, please. One person? That's right. That's it. Perfect. So after collecting all of the orders from the supply zone, price tried to break below this last weak point, this last weak low point, and tried to break a structure down here and this flip zone, because price was reacting on this flip zone. And from this reaction, price created a weak low. Because why is it a weak low? This is a weak low because, quick answer.
It didn't break any structure to the upside.
That's correct. That's right. But that's a weak low because it couldn't break above the last strong high point. So this was the last strong high point, and this low couldn't break above the last strong high point. So once again, price was reacting on this supply zone. Couldn't break below the last weak point. Couldn't break below the last weak low point here. This could have been a break of structure. Price couldn't collect enough orders, couldn't collect enough fuel. So this means this high will become weak too, because if a high can break below the last weak point or a strong point, that will be weak, right? So basically, our structure right here, our structural high and lows. This is the structural high point. This is the structural low point. And as you can see, between these highs and lows, between this high and low, price just created a perfect range. Basically, this is a liquidity range right here and waiting to be swept on the upside and the downside too. Because if you take a closer look, this is a liquidity line right here. First bottom, second bottom, liquidity line. First tap, second tap, third tap, liquidity line, or even the fourth tap, So basically, this is just the whole range between the strong high and weak low. Price is ranging since 14th of February. So more than a week, price is just ranging inside of this range. So basically, all we need to wait for on the long term is a good sweep of both sides of the liquidity range right here. And after the sweep happens, the final decision, or I mean the final direction, will be decided, right? Because basically, if price is ranging in this in between this high and low, that means price will sweep the upside and the downside liquidity sooner or later. And if the sweep happens on the upside and the downside too, price could finally decide its direction, and it can decide if it's bearish or bullish. So basically, this is a bias deciding range right now, but we can identify clear structures in between these real strong high structural lows and highs. So basically, between this high and low point, we will have a substructure point, substructure low, substructure high. Let's just identify those highs and lows. So as you can see, price was reacting on this supply zone, couldn't break below the last low point, but from this movement, price created a downside movement here and an upside movement here, which means it created a pullback. And from this pullback, it broke structure to the downside here. This was a last break of structural point here. Okay. This means price from this movement, after reacting in this flip zone, created a change of character to the upside. Here, first a liquidity. And from this movement, price created a change of character to the upside. So basically, this movement right here, from this demand zone, was a change of character. This is a character changing movement that will step into a supply zone. And after tapping to a supply zone, price changed character to the downside again, because this was the last demand zone. And from this supply zone, price changed character to the downside here, right? Here's a change of character line again to the downside. Okay, so if price changes character to the downside, that will mean we will have a supply zone. On the 4-hour chart, we can't really identify a good supply zone, maybe this one, that created the whole inefficient candle to the downside that was leading to a change of character. But this candle was already mitigated after the following candle of this huge inefficient candle. So it was mitigated right away. Price reacted on this supply zone. As you can see, this was a reaction. It was struggling to break above. It was struggling to break above, collected all of the orders from this supply zone. And from this supply zone, it created a breakout structure, a sub breakout structure to the downside, right? Because if you take a closer look, this was a body break to the downside. So we have a sub breakout structure to the downside right here after reacting on this supply zone. Okay, what can we see next? We can see that price changed character to the upside with this movement, right? So basically, changing characters back to back to back, change of character, 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 change of characters everywhere. What does this mean? That we are currently in a range on the 4-hour chart, right? We are currently in a huge range. So price change character back to the upside here, because this was the last supply zone that created inefficient push and the breakout structure to the downside. From this demand zone, price change character back to the upside here. After this, price change character to the downside here again from this supply zone. And this is our last supply zone. This is our less valuable supply zone, right? So let me just mark it out. I believe we'll be able to refine this on the 15-minute chart, and there will be a 15-minute supply zone up here. Okay, so from the supply zone, price change character to the downside again on this demand zone. Created liquidity for this zone here, as you can see, and after sweeping the liquidity, price tapped into the supply zone. But the supply tap couldn't give enough power to price to fuel the short movements and break out from the range and create a breakout structure to the downside. So it wasn't enough fuel for price to create a breakout structure, strong, weak low break, flip zone break. Instead of breaking below all of these low points and all of these valuable demand low, everything, it just went to the upside again and mitigated some sort of supply here, creating a liquidity for the upper 15-minute supply zone. And you will see that better on the 15-minute chart. So we also have a demand zone on the 4-hour chart down here, which caused a change of character to the upside again. Because as you can see, this supply zone caused the change of character to the downside here. And so from this 4-hour supply zone, the change of character happened. Here, as you can see, here's a change of character line. Price created a pullback right here, reacted on the supply zone, couldn't give enough fuel to price to break structure to the downside again. Instead of breaking structure to the downside again after a reaction, this is a pullback right here. It just changed character to the upside again. And all of this change of character movement, character changing movement started from this demand zone right here, this 4-hour demand zone, because there's inefficiency, although as you can see, here's inefficiency. Okay, all of the 4-hour zones have been marked out. Let's switch to the 15-minute chart. Is it clear? Can you follow me? Am I too fast? Am I too slow?
Yeah, good.
Yep, fine.
Okay. Changing to the 15-minute structure, 15-minute chart. I'm just closing these zones a little bit. And let's see the refinements. I will just refine it. What are you drawing?
I'm sorry, by accident.
No problem. No problem. So on the 4-hour chart, we can refine this 4-hour supply zone on this 15-minute candle, because as you can see, the whole character changing movement after the liquidity sweep from this region, because price with this candle swept all of the liquidity from above this supply zone. As you can see, this was a clear liquidity sweeping candle. I will just mark it out with a arrow line right here, starting from this one. As you can see, this is a clear liquidity sweeping candle here. And from this liquidity sweeping candle, an inefficient push started to the downside, as you can see. A huge inefficient movement started to the downside, changed character on the 15-minute chart several places, here, 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 here. So basically changed character everywhere. Although also it built up liquidity here for that supply zone. As you can see, this is a perfect clear liquidity line, but I can refine this liquidity line to these highs. So basically, as you can see, first step, second step, third step, all of this liquidity line were built up for this character changing supply zone up here that was leading to a change of character after a liquidity sweep here and supply tap. So this was a extreme supply zone right here. And this is the only unmitigated supply zone in this region. All of the supply zones in this region are mitigated. As you can see, price just came up to this region, created more liquidity. So basically, I will just mark it as a double tap instead of the liquidity line. It won't confuse us. So it created more liquidity on this line, as you can see. First step, second step, perfect liquidity built up for this inefficient character changing supply zone. Okay. We can also refine this 4-hour demand zone. I won't refine this to this week. This will be right demand zone in this case, because as you may know, this is the last downside candle before the inefficient movement, but this candle has been already mitigated by the following candles week. But this candle is too small to be a 4-hour zone. So I will just use this refinement instead of the week refinement. So this will be our demand zone or 4-hour demand zone. Okay, what else can we see on the 15-minute chart? On the 15-minute chart, we can also see that we have a demand zone reaction in this region. This is a 15-minute demand zone, as you can see, that was leading to a breakout structure here, a liquidity sweep from this region with an inefficient movement. As you can see, from this demand zone, an inefficient movement started to the upside that swept the liquidity at this region, created a liquidity, and created inefficient movement, created breakout structure here. So this is a pretty valuable demand zone, but I will just refine it on the 5 minutes right away, because this is not a clear zone on the 15-minute chart, and on the 5-minute chart, it's a much cleaner zone, as you can see. So this is the 5-minute refinement of the 15-minute zone. Perfect liquidity built up in this region, sweep of the liquidity to the downside. After the liquidity sweep and the full demand zone mitigation, price just changed character to the upside here, 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 here. So everywhere. As you can see, it literally changed character everywhere to the upside. Okay, well, what else did it do? It built up liquidity in this region, right? So here's more liquidity built up for this supply zone. So I'm really positive about this supply tap. Price will tap this supply zone because first, second, third, fourth, fifth, seventh tap. So basically 7 equal taps built up on the 15-minute chart, on the 5-minute chart, 1-minute chart. Right? Right. What else can we see? On the 15-minute chart first, we can see a clear liquidity line right here, built up for what? Can you just mark the demand zone? Exactly. All of that liquidity, all of this liquidity line were built up for this character changing demand zone right here. And basically, this is a right demand zone right here, because, let me ask you, why is it the right demand zone, and why isn't this downside candle the right demand zone in this case? Why is it the right demand zone?
That was the last candle before the inefficiency.
Exactly. Good answer. Sorry, I'm just drinking. Okay. So all of this liquidity were built up for this character changing movement, demand zone, which was leading to a change of character here, swapped liquidity from this region, liquidity ran like built up liquidity, inefficiency, everything. So this is a pretty really valid demand zone. Only one problem is with this demand zone. What is the problem? That this is in lunchtime.
Lunchtime.
Not lunchtime,
Yeah.
because that's not lunchtime exactly. That's Frankfurt zone. Lunchtime is before New York session. Frankfurt zone is before London session. So this is a Frankfurt zone, which will be induced. So basically, this is inducement. What are you marking? Equal bottoms, right? There's equal bottoms. I'm just continuing the overall monologue. So all of this demand zone were built up for the built up in the Frankfurt session, right? So this will be liquidated. This will be a part of the liquidity. And if this will be liquidity, which zone could hold price after the liquidity sweep? This downer area, right? If price sweeps the liquidity, this Frankfurt zone, and sweeps the liquidity from below this demand zone, because here's the first bottom, second bottom liquidity line, which zone could hold price? This downer extreme area that was changing character on the 15-minute chart several places. I don't know who's talking or whose background voice am I hearing, but please just mute yourself because it's annoying. Thank you. So if price sweeps the Frankfurt zone and sweeps the liquidity, this downside extreme zone, demand zone, could hold price. So let's see the overall plan on the 15-minute chart. I will just draw the plan on the 15-minute chart. Price will sweep this zone. Maybe we will have a small reaction and creation of the third bottom and reaction on some sort of supply zone that was creating the break of this Frankfurt zone. That's first possible scenario. From this supply zone, price can sweep all of the triple bottoms in this region, tap into this demand zone, this extreme demand zone, and mitigate the 50% of this zone. If the liquidity is being swept, price will create a small pullback, tap into this zone, and from this zone, we can wait for a change of character. We can wait for a 15-minute change of character. And why are we waiting for a 15-minute change of character?
4-hour demand.
Exactly, because that's a 4-hour demand. We will have to wait for a 15-minute change of character inside of this demand zone, because this is a 4-hour demand refinement to the 15-minute chart. So if price steps this zone, we will have to wait for a 15-minute change of character. If a 15-minute change of character happens, we will have to wait for a 1-minute change of character inside of the 15-minute change of character. And if that 1-minute change of character happens, we can enter in a long trade and targeting this upper supply zone, which has a bunch of liquidity just below it. So basically, this is our master plan right here. But as you may know, this is just a prediction. All you have to do is react on what price is giving you. But this is just a good possible scenario for today's. So this could happen. We might see the happening of this scenario. Second scenario, price is not feeling like coming down to this zone. Don't want to mitigate these zones. Why did this window pop up? Let me just remove it. So, sorry, price doesn't really feel like to come down to mitigate these zones or break below these zones. Instead of creating the liquidity sweep and tap of this demand zone, it just continues the movement to the upside and taps this supply zone. On this supply zone, what do you have to wait for? I'm asking you again. What are we waiting for on this supply zone?
15-minute change of character.
15-minute change of character. I have to ask this every single time because I see a lots of you guys are failing with this, because I'm saying this in every single live session. I'm saying this in every single recap video. I'm saying this in every single markup, but you're still waiting for a 1-minute change of character inside of a 4-hour zone. You are impatient. You have to wait for a 50-minute change of character inside of a 4-hour zone. I'm saying this every single session. You have to memorize this, okay, guys? You have to wait for a 50-minute change of character inside of a 4-hour POI. That's the #1 golden rule of a 4-hour POI. So if a 15-minute change of character happens here, a 15-minute supply zone will be formed here. I won't change the color. And if a 1-minute change of character happens here also, let me just remove this drawing. If a 1-minute change of character happens here also inside of this 15-minute POI, you will be able to enter in a trade based on that supply zone, that 1-minute supply zone that created the change of character. So this is a triple confirmation, but you have to wait for a triple confirmation Otherwise, you'll be swept out from the trade. Because, why am I saying this? Because if price can't change character on the 15-minute chart and can break below this low point, this demand zone, it can break below. But let's say it breaks below some demand zones on the 1-minute chart and changes character on the 1-minute chart on several places. So this movement changes character on the 1-minute chart on several places, here, here, here. You will think that, oh my God, this is a powerful change of character because it changed character on several places. I have to jump on this trade. But price is coming from an unmitigated demand zone on the 15-minute chart, and the overall order flow is still bullish. You can't just jump on a 1-minute change of character after a 4-hour supply depth. All you have to do is wait for a 15-minute change of character. All you have to do is wait for a break of this low point, because entering before this low point breaks will be extremely risky. You will be swept out. You've experienced this before, right? You are all experiencing this before. Am I right? You've lost a trade based on this concept.
Yes, exactly.
Yes.
All you have to do is wait for a 15-minute change of character and don't rush, guys. If the 15-minute change of character doesn't happen in the session and you're missing a trade or you're don't execute the trade in the session, just leave it. Who the actual hell cares, right? You got 300 more days in this year. You get more days to trade in this year. You don't have to trade every single day. Okay, just wait for a 15-minute change of character, moral of the story. So these are the two possible scenarios for the 15-minute chart. Let's see the 5-minute chart. Okay, on the 5-minute chart, we can really refine this zone. Basically, the refinement will be the same. As you can see, this is the 15-minute Frankfurt zone, and this will be the 5-minute Frankfurt zone. But for the clarity, I will just refine this zone. Okay, on the 5-minute chart, we can identify the same thing. Basically, nothing changes, as you can see. Trend line is the same. Trend line liquidity is the same. Frankfurt zone is the same. Double bottom is the same. All we have to do is, we can't really refine this demand zone because this is already a refined zone from the 4-hour chart to the 15-minute chart, right? So we can't refine this more on the 5-minute chart. So all we have to do is wait for a good confirmation. Let me show you what is a good confirmation. Basically, as you can see, here's this zone. Here's this demand zone. This 5-minute demand zone. Also, let me just remove this liquidity line. Also, here will be a 5-minute change of character to the downside. If price change downside, okay, if price breaks below this change of character line, that will be a change of character to the downside on the 5-minute chart, of course. This will be a change of character. But if this happens, and this happens outside of the lunchtime zone, so it happens after New York opens, price will create a supply zone in this region, somewhere in this region, right? I'm just drawing the possible scenarios. So if price creates a change of character to the downside, which will be outside of lunchtime zone, you'll be able to execute a trade on this supply zone that was causing the change of character to the downside with a 1-minute confirmation, right? So price changes character here. Here's a change of character line. Price changes character. 1-minute structure is coming back to mitigate the zone. 1-minute change of character entry, and you'll be able to execute an entry on this supply zone, on this fresh supply zone, 1-minute supply zone that causes a change of character. And what's your next target point? What will be your next target point? I'm asking you again.
4-hour zone.
Exactly. That will be your final TP, because this will be liquidated. This is liquidity. All of this is liquidity. There's liquidity too. And as you can see, between the liquidity and between the 4-hour zone is just inefficiency. So if you see something like this, so basically here's liquidity and here's a 4-hour zone, 4-hour POI. And between these zones, between these lines, the liquidity and the 4-hour PI, there is just inefficiency. It's one more confluence for price to fill up this inefficiency and head down to this 4-hour demand zone. So basically, this will be your final TP. If this scenario happens, this downside extreme 4-hour zone would be your final TP. And just a quick calculation with 2 pip stop loss, that will be almost 1 to 20 risk reward ratio. So you have 20 risk reward ratio between this zone and this zone to trade. Of course, you won't hold it for 20 risk reward ratio because we are booking profits. We are taking hard TPs. We are taking profits on demand zones, on 15-minute demand zones. But that's a good indicator for you for the last final TP, and you have plenty of room, 20 risk reward of room between these zones to trade. So that's a good indicator. Of course, for example, you take a trade here, you execute this trade, and take profit at 1 to 8 at this Frankfurt zone. You can, of course, you can do that. If this scenario happens, I will just take profit at this Frankfurt zone and I will be happy with the 9% profit. But if price reacts on the Frankfurt zone and let's say breaks below it, there will be another supply zone that was leading to a break. There will be another supply trade with a 2 pip stop loss. That will be another 10 risk reward ratio, I believe. Yes, another 12 risk reward ratio. So you've got plenty of room between these zones to trade, right? All I'm showing you is the possible scenarios. Okay, so confluences are lining up. We got liquidity built up for this zone. We got inefficiency that needs to be filled up. We got Frankfurt zone. We got a downside trend in this region. So all of the confluences are lined up for this demand tap. Okay, let's see the confluences for the upside zone. We got the same scenario here. Basically, we had the same scenario on both sides. As you can see, here's liquidity line, here's liquidity line. Sorry, here's liquidity line. This is liquidity, and basically between these liquidity lines, what else can we see? Between the zone and the liquidity line, there's inefficiency again, right? So as you can see, there's inefficiency again. This is a confluence for a long trade. So basically, you're asking, okay, flipping, there are two confluences for two different directions. Where's price heading? That's why I'm saying you have to react. All you have to do is react. All you have to do is wait for a good confirmation. If price creates a change of character and price creates a change of character here also, you're going short. If price creates a breakout structure here and creates a 1-minute change of character on the demand zone, you're going long. All you have to do is react. You don't have to be confused about the direction because basically we are between two walls. We are in the middle of the road. So right, this is the first bus stop, this is the second bus stop or higher time frame bus stops, of course. This is our second higher time frame bus stop. And basically we are in the middle of the road. If price gives a good confirmation, breaking the structural high or changing character and giving a 1-minute change of character too, you'll be able to enter in trade and target one of the bus stops. And from that bus stop, you'll be able to execute one more trade, or you'll be able to execute one more trade from this bus stop. That's why I'm saying every single time that you have to react on what price is giving you. You don't have to be confused. You don't have to be overcomplicate things with the directions, with the structure. All you have to do is react on the things you see. And if you see a change of character to the downside, you're going short. If you're seeing a breakout structure to the upside, you're going long. Right? It's this easy. Just always confirm your trades. I'm always confirming my trades basically. So this is the 5-minute expectation. Let's see the 1-minute chart. I believe there will be no point to see the 1-minute chart. Yeah, this is just a whole mess. New York opens in 30 minutes. So all we have to do is wait. Literally, all we have to do is wait. As you can see, all of these zones are the part of the lunchtime fake zones, which is actually liquidity on both sides. As you can see, this will be a range. This range will be set. All we have to do is wait for a sweep, wait for a change of character, wait for a breakout structure, wait for anything, any good confirmation. And if you have a high criteria trade, you're taking that trade, right? It's all. That's literally all. Okay, so these are the expectations. I'd like to hear your questions because I believe you'll have questions. So let me hear your questions. If you got any about the price action, about anything.
Hi, are you able to hear me?
Yes, I can hear you.
Yeah, I have a doubt regarding where price is heading currently.
What doubt?
Like where price is heading. Like there are two scenarios here, right? In 5 minutes.
That's what I was explaining. That's what I was explaining, man. All you have to do is wait for a direction because right now there's no clear direction. All you have to do is wait for a clear direction. If price creates a breakout structure here to the upside, we are going to the supply zone. If price creates a change of character to the downside, we're going to the demand zone. There's no clear direction. That's what I was talking about for 10 minutes.
Okay, yeah, correct. If it is heading towards like the upper supply zone, it should break the previous high, right? The 5-minute high.
Yeah, that will be the best confirmation. So if price breaks about this last high point and creates a breakout structure to the upside, yes, that will be the best confirmation for the longs. You'll be, if this scenario happens, you'll be 100% sure that price is going to react on this demand zone and tap the supply zone, because if this high breaks, more likely there will be more liquidity. And if there's more liquidity, we will react on this demand zone and go straight up to that supply zone. But a good confirmation could be also, let's see the 15-minute chart. There's no other structural point. A good confirmation could be also if price, let's say, changes character here, changes character to the upside, doesn't tap into the supply zone, which will be hard because basically every single candle in this price section is a supply zone, creates a liquidity for the character changing demand zone and enter on the trade. But yeah, the best scenario is the break of this structural high point.
Okay, if it breaks the high below, there will be a demand zone created, right? Then we need to go back to 1 minute and wait for change of character.
Exactly. So yeah, exactly. If price breaks this high point, that will be a breaker structure, right? This is a breaker structure. If this breaker structure happens, there will be a demand zone. If this demand zone forms, this will be a 15-minute or 5-minute demand zone. If this demand zone forms, all you have to do is wait for a 1-minute change of character on this demand zone. Price taps this demand zone, changes character. You will have another 1-minute demand zone. And now you are safe to enter in a trade. You are safe to enter in a long trade targeting this upper supply zone.
All right.
All you have to do is wait, literally.
Yeah, thank you.
You don't have to rush anywhere. All you have to do is wait for the best confirmations. Everyone is rushing. Everyone is rushing with trading. Everyone wants to become a millionaire in days, in weeks. It's not like that. You have to chill out. You have to wait. Forex is a long run. It's not a sprint, right? It's a marathon. Okay, let me just read the questions when we refine the 4 hour and the 50-minute. Basically, I'm refining those zones every single time because 90% of the time price taps the 50-minute zone inside of the 4 hour zone. So 90% of the time, the 50-minute zone inside of the 4 hour zone is being tapped. So I'm basically refining it every single time. Makes sense, everything amazing, bro. Thank you, man. Appreciate it. Marcel, if you have time, you can go over when you use the 5-minute, please. Apart from the 50-minute refinements, you use it for flips. I'll just show you. I'm using it the way I did. I'm using it for identified clear supply zones, using it for identify clear liquidity lines, demand zones. And yeah, basically the 50-minute and the 5-minute is almost the same. It's almost the same. The zones are much cleaner on the 5-minute chart, but the 5-minute structure and the 15-minute structure is almost the same. As you can see, 5-minute structure is like this: going up, small pullback, going up, small pullback, going up. The 15-minute structure more likely will something like this. Let me just check. No, the 15-minute is exactly the same. So the 15-minute and the 5-minute is literally the same. The 5-minute is much cleaner to refine from the 15-minute. If in lunchtime rip zone the price creates liquidity and always removes it within that time period, is the liquidity taking valid? I don't really understand this question, but if price creates liquidity in lunchtime rip zone, and basically every single zone in the lunchtime rip zone will be liquidity, and if price takes that liquidity, sweeps those zones, of course that will be liquidity sweep, because those are real orders. Those are orders placed by all algorithms, placed by banks, institutions, people, retail traders. And if price sweeps that liquidity, that will be a liquidity sweep, of course. Those are orders that are being swept from the market. Are we in a pro trend if you are looking for a buy currently? No, we got no clear trend in this region. Or pro trend on the higher time frame is still bearish. Higher time frame trend is still bearish, as you can see. It's still creating lower lows, lower highs, lower lows. It's just reacting on supply zone and struggling to break below or above some point. So basically the trend is still bearish, but we are struggling to decide the direction. All we have to do is call like liquidity on one or either on the top side, either on the bottom side, and decide the direction, right? Do we add also 1-minute zones on chart, or of course we add, of course, the valuable zones, only the valuable zones. For example, if we are waiting for a change of character, for example, if we are waiting for a cancellation trade, of course we are adding 1-minute zones. but only the high probability valuable demand zones or supply zones that has liquidity, that swept liquidity, created inefficiency, created break of structure, change of character, anything. Session was great. It's not over yet, but thank you. Okay, I get it. Thanks. What is Frankfurt? It's Frankfurt. Frankfurt is a session, just like London, New York, Asian session. It's a session. Opens at 9 a.m. Sorry, 8 a.m. in Hungarian time. So Frankfurt opens here. This is 8 a.m. Frankfurt opens here. London opens here. New York opens here. This is New York lunchtime rape zone. Between these bugs, this is lunchtime rape zone. Between these bugs, this is Frankfurt rape zone. So basically, it's the same concept as the lunchtime rape zone, fake zones. After add 1 minute zones, we wait for chilling markets. Did you see the video course yet? Because there are clear examples. Please watch the recap videos too. You'll be able to see the way I mark up the zones. You'll be able to see which zones are we taking. So yeah, can we get short in one? What's that number? 113.55.8, 113.55.8. Why would you go short in this region? There's just explain. Why would you go short in this region? Why would you short in this region? It doesn't really matter if it's on the 5 minute or the 1 minute. Just look at the liquidity. Why were you short in this region? If you were short in this region, you will be part of the liquidity. Just look at this liquidity line. I was explaining this. Lots of liquidity sitting above. Liquidity. If you are opening on this supply zone, you will become part of the liquidity. You will be literally the liquidity. You will be fueling your longs. Yes. You're welcome. You're very welcome. How do you like my new font size here and text? It's pretty dope, right? Spot the liquidity before you become the liquidity. Exactly. That's my number one rule. Basically, I'm trading based on liquidity. Liquidity is my number one concept for me. Of course, structure is fucking important. Structure is fucking important. Structure is king. Higher time frame is the king, right? Higher time frame structure is the king. But I'm waiting for liquidity every single time. Liquidity is the number one concept for me. Markets are unarguably moved by liquidity. All of these movements are happening because there's liquidity in the market. All of these high movements are happening because there's liquidity in the market. Markets are moved by liquidity, not by structure. Structure is fucking important, as I said. Structure combined with liquidity is the way to go to trade. But my number one concept is liquidity every single time. And if you can use the liquidity, if you can use liquidity the right way, and you learn to use it the right way, you'll be unstoppable. Literally, you'll be unstoppable. If you can combine it with structure, you'll be fucking unstoppable. You'll be killing the markets. You just have to identify liquidity. All you have to do is wait for the liquidity sweep and learn how the liquidity actually works. And it's pretty easy. It's pretty easy. I'm explaining it in maybe 1 hour in the video course, right? All you have to do is backtest it. Everything is in the video course. All you have to do is backtest it. It's not a hard concept. You don't have to overcomplicate it like ICT or any other mentors or memberships. You just have to take it easy. You just have to keep it simple. Liquidity is like other concepts. You just have to keep them simple. See? Liquidity line swept. Liquidity line swept. Liquidity line will be swept. All you have to do is combine it with structure. combine it with higher time frame structure, combine it with lower time frame structure, and use it to your advantage. And you'll be fucking unstoppable. Liquidity sweep happen on the upside, liquidity sweep will happen on the downside. If you're knowing the trend, knowing the higher time frame trend, knowing the lower time frame trend, and you're combining all of this knowledge with liquidity, you'll be fucking unstoppable. I'm just saying it one more time, you'll be unstoppable. What's up, Captain Mars? Don't use premium. Basically, premium discount is a useless tool. It's just like drawing a 50% box on your screen. I mean, I can tell where's the 50% by just simply look at it. If I take the structural high and structural low, I know that here's the 50%, and if price goes below this 50%, that will be the discount or premium. You don't have to use the premium and discount. It's literally useless. Bro, you always wait for liquid creation and sweep before you entry. 90% of the time I do. Yeah, 90% of the time I'm trading based on liquidity. Just let's see the example from yesterday. Where was the New York session? New York session. Where's New York session? My God, 22nd. Yeah, this one. The trade I sent for you, literally based on the, okay, this trade was based on the structure, the overall structure, and on the liquidity. All of this trade was based on liquidity and structure. Structure, what is our structure here? Downtrend, clear downtrend. My mom will tell that this is a downtrend just simply by looking at the chart, right? And she doesn't even know what Forex is, but she can tell that this is a downtrend, clear downtrend. Okay, what's happening right here? Price reacting on some supply zone, price changing character after tapping the supply zone, sweeping liquidity. Once again, here's liquidity, price swap the liquidity. If liquidity is being swept, more liquidity will be pumped into the market. Liquidity swept equals more liquidity into the market. So liquidity being swept, more liquidity were pumped in the market. As you can see, swept, more liquidity pumped in the market in the form of a liquidity again. So once again, swept liquidity, more liquidity in the form of a liquidity. Break of structure to the downside, continuation of the overall trend, which is bearish in this case. So continuation of the overall trend, breaking structure to the downside, breaking structure to the downside, building up liquidity. We are trading based on structure and liquidity again. Here's liquidity. Which zone will hold the liquidity sweep? This one up here, right? This zone holds the liquidity sweep. If the liquidity is being taken out from the market, it will equal more liquidity placed into the market. So stop loss is taken out, liquidity taken out from the market. This equals on the next order block, more liquidity could be placed into the market. So more orders have been pumped into the market after taking out these liquidity lines. Because stop losses were triggered on this line. Stop losses were triggered equals more orders will be placed because more orders are free. More orders are free to be placed. Order block holds the price, or order block holds the price. More orders are free to be placed. These orders are free to be placed here, placing that, causing the continuation of the overall bearish order flow. It's literally this easy. Identify liquidity, identify order flow. Everything else is just confluence. For example, the inefficiency, for example, the, I know, change of character, everything is just confluence. Market is moved by liquidity. Market is moved by the structure. I mean, structure is moved by liquidity. In 1 minute, liquidity gets swept to the downside into the 5-minute demand zone, and we get a change of we get a change of character to the upside without the break of the 5-minute high. Will we look for an entry without liquidity creation for a zone? Yeah, of course you can. It depends on you. If you are willing to take a risk, if you are willing to take the risk that you're entering without the liquidity, it's actually not risky because liquidity is being swept. So let me just draw it. Here's demand zone. Here's liquidity for the zone. Liquidity is being swept. Changing character. Bam, entry. If this happens, you don't really need liquidity because liquidity has been already swept. Liquidity is swept, liquidity taken out, more liquidity has been placed here, so this will be more liquidity. If it creates liquidity, so if it creates liquidity here, that will be plus confirmation for the trade. This will be 100% trade. This will definitely tag you in and go to your direction. If your direction is good, if your bias is good, this will be a 100% trade. This is a confluence. This is one more confirmation. Liquidity swept. Liquidity created. Liquidity created. Easy without fuel in the car. How could? Yeah, easy without the fuel in the car. How could the car move? Exactly. This is literally perfect example. If you're talking about the bus stops, we are talking about the road, talking about the bus stations. Let's talk about the fuel for the bus. Liquidity is fuel for the bus. Liquidity is fuel for the bus stations. Without the liquidity, the bus can't go. If there's no liquidity, the bus stays in one place, right? It is valid to trade in every 5-minute POI. Sorry to say, but that's a bit dumb question. You can't trade on every single 5-minute POI. I'm literally teaching this, how to identify the good POIs, how to identify the good zones, and how to trade based on those good zones. I'm just literally saying this in every single session. You need liquidity, you need blah, 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 blah. Inefficiency. So yeah. My question, please, about scalings. Sorry, I didn't read that. What is your question? Any good example for scaling without inducement? No, there is no good example for scaling without inducement. If you're taking a scaling trade, you have to wait for inducement / liquidity. Without liquidity, there won't be a good selling trade. Selling trade. Without liquidity, you'll be the liquidity in the selling trade and you'll be swept out. Cancellation and selling trades needs liquidity. That's all. Is it a must-have that range liquidity must be swept the upper and is it a must-have that a range liquidity must be swept the upper liquidity and the bottom liquidity? That's basically a rule. If there's a range, the liquidity on the upside and downside will be swept regardless. Some call it this pattern the AMD pattern, but we are not calling this on fancy names. It's just a range sweep. It's just a simple range sweep. Sweep the upside liquidity, downside liquidity, react on some supply zone and demand zone. Okay, session starts in 10 minutes. So let's take a look at the 1-minute chart. Okay, the 1-minute chart is a whole mess, right? It's a mess. It's just a liquidity pool. Upside liquidity being swept with this movement. There's more downside liquidity. So there's one more confluence for the downside liquidity sweep and the break of this zone and the change of character here. So more likely the liquidity will be swept in this region. Supply zone will be formed here, hopefully outside of the lunchtime rip zone. So starting from this time, hopefully liquidity will be swept, change of character will happen here, supply zone will be formed, and you'll be able to execute a short trade. I've literally told you every single scenario that could happen today and told you how to react on those scenarios. I literally told you everything. Now it's your part. Now it's your part if you understood it. Now it's your part if you can use it correctly. And all you have to do is just react on what price is giving you. I'm just saying this in every single session, every single markup, every single recap video. All you have to do is react, not predict. Okay, guys. I'm answering one more question, if there's any more question. Thanks, bro, for today, leaving for work. Always a pleasure. Thank you, man. Appreciate it. So, okay, if there's no more questions, I'm going to stop the recording and this session also.